What are the pros and cons of refinancing your mortgage, and should you do so or wait? We'll demystify this topic in the following video. My name is Chris at Hauseit. In case you're not familiar with the platform, Hauseit is the largest for sale by owner and buyer commission rebate company in New York City, established in 2014. You can learn more about how to save money when buying and selling property and how to save money on broker commissions as well as closing costs at www.hauseit.com. The spelling is below, and you can email us team@hauseit.com. Please hit subscribe if you like what you see. Let's get started. One of the most significant pros of deciding to refinance your mortgage is to take advantage of lower interest rates. For example, let's say you got a 30-year mortgage 15 years ago where interest rates were much higher, and let's say that your fixed interest rate is 6%. Well, if the average 30-year fixed rate today is only 3.5%, and you have 15 years left in your mortgage, then it makes a dramatic amount of sense to refinance. Essentially, the more significant the rate drop and the longer you'll be able to take advantage of the lower interest rate savings, the better and the more worthwhile it is to refinance your mortgage. Another great reason to refinance your mortgage, or at least to consider it, is if you have an adjustable rate mortgage with an interest-only feature or a fixed interest rate teaser rate for a number of years, typically 5 to 10 years. At the end of these 5 to 10 years, your interest-only feature may expire, meaning you will then have to pay principal payments over the life of the term. Typically, the original term of the note will still be 30 years, so if you pay interest only, let's say in the first 10 years, then the remaining 20 years will have to amortize the entire mortgage balance. This can be quite a surprise for borrowers if all of a sudden they have to pay not only just their interest, but also principal payments that might be larger than a traditional 30-year loan, because remember, the entire balance is being fully amortized over 20 years in our example. Another thing to keep aware of is the fixed or teaser rate structure of many adjustable rate mortgages. So many adjustable rate mortgages will have an initial teaser rate that is lower than what the current market pricing is. For example, for the first 5 to 10 years, the initial teaser or fixed interest rate might be significantly lower, maybe by half a point, than the current 30-year mortgage interest rate. However, at the end of this teaser period, say after 5 to 10 years, then the interest rate becomes floating according to an interest plus a margin. The interest rate, when it becomes floating, typically adjusts every year. It is based off of a commonly used index such as 1-year LIBOR, which is published in the Wall Street Journal and many other sources, plus usually a margin, for example, 2.25%. So hypothetically, if your loan were to become floating today, and let's say 1-year LIBOR is around 2% today, and your margin is 2.25%, in that case, your interest rate for this year, because it resets yearly, would be approximately 4.25% versus an initial teaser rate that may have been significantly lower, such as 2.6%. As you can imagine, the prospect of an interest-only or a teaser rate period expiring soon is a great incentive for a borrower to wish to refinance his or her mortgage. If you simply don't have the cash flow or the wherewithal to begin significantly heavier monthly payments, then it may make sense to take a punch and absorb any costs and fees associated with refinancing and essentially extend your loan. So what are the cons of refinancing a mortgage? Primarily the reason is cost. If you think about it, banks have to earn something or have an incentive to allow you to refinance, especially if it's going to be at a lower interest rate. They certainly charge fees, as we discussed in another video. For example, the cost to refinance a approximately $700,000 mortgage may be around 1 point or 1%. So you'll have to factor this into your decision making on whether it makes sense to refinance at all. Other reasons for why you should perhaps consider not refinancing your home are if you plan to move in the near future, say in the next 1 or 2 years, and you as a result may decide to sell your home. If you are going to be selling your home in the next 1 to 2 years, and even if your interest rate resets higher, then it may well make sense to not pay those costs and fees of refinancing and stomach the higher rates for a brief period before selling your home altogether. Another reason, maybe perhaps you are expecting a large payout in the near future. For example, if you're a star tech worker, banker, or trader, or in any other profession, and you expect a large bonus or other payday in the near future, let's say end of the year, next year, and you expect this payment to enable you to significantly delever and pay off some, most, or even all of your mortgage, then it may make a lot of sense to simply wait until you have the cash to pay it off completely. One last reason to consider: if, for example, you've taken advantage of this bull market in broader markets, in stocks, and perhaps you think that stocks can't go up any further and you wish to take some of your chips off the table, well, it may make sense to sell and make them real gains by paying down some or all of your mortgage. Not only will you pay off real debt, but you'll also reduce the monthly negative cash flow you experience from having to pay. We hope you found this video helpful. If you did, please leave us a comment below, hit like, subscribe. If you're thinking about selling perhaps, or buying a new home, please check us out, www.hauseit.com. We offer many ways where you can save commission whether you're buying or selling, and save on closing costs, up to 2% when you're buying, and up to all 6% in broker commission when you're selling. www.hauseit.com. The spelling is below, and we hope to hear from you.